All right,
Well,
guys, we are back. Uh, boy,
yeah,
what type of market do we have here? The craziest moves have just happened in the last 10 minutes. I mean, Hal, if you want to hop in there and take it over on this technical analysis of
yeah.
what
So
just
I
transpired.
I was watching The Spy, and all of a sudden I saw like maybe about 500,000 shares traded on the candle. And I was like, that's a lot of volume coming into The Spy. And then all of a sudden, like 2 million more shares dropped in there, and it boosted off the 440 up to the 442. And I was like, okay, it's probably gonna get rejected here. Got a little rejection. Another million dropped in there, took it on up to the 44 or 444, and then it got a huge rip down. So what we were speculating is that someone was building a position for this downwards movement above the VWAP. And
Mm-hmm.
it must have been a huge position for it to have pushed from the 440 all the way up to the 440. That's a $4 entry. They must have got their whole corporation in there.
They threw everything at the whole sink at it, man. And then you see it just yanking right back down all of a sudden, and that's what we're kind of thinking, man. I don't know. We're what 12 minutes away from the actual live stream of Jerome Powell and talking. Um, I don't know. We'll see what's going to happen. It's
I don't think
crazy.
anything you can say can make that come back up. I just don't know. I'm completely bearish on this now.
You are not wrong. All right, I'm just getting a few things worked out here while we let's see.
Hope Orlando took his profit. He was in long at the beginning of the day. Hopefully he got that big rip to 444 and sold.
Yeah, Orlando,
Cause
if
it
you're in here, let us know what happened. Feds. Woo! Wow, that was really loud. I'll try to keep that not too loud. But yeah, the feds aren't talking yet. They did release a whole bunch of PR here in the last, what, 15 minutes? Let's see. Yeah, he said he been took profit. Good. I'm glad to hear that, man. So, right, like the spy is full of PR all of a sudden. Right when all this crazy movement started happening. Looks. What else do we got here? Something about NATO. Oh, that was earlier this morning. NATO. So they're saying they're going to complete monthly bond buying taper in early March. So they're going to be done with buying bonds. Whoops! I think I just lost my volume here. Hold on just a second, guys. I can't hear Hal, so I don't know what he's saying or doing.
till he
There we
gets
go.
his earphones in.
All right, I'm back now. Sorry.
Oh, praise God.
Yeah, so I don't know what Hal said, but yeah, they're talking about they're going to stop the bond buying early March. Balance sheet reduction to be predictable. Says balance sheet reduction to happen via in reinvestment pace. So, this is just like little snippets, but we'll see what they actually are going to come out here and say. Unemployment rates have declined substantially. I don't know about that. I don't know what he's looking at there. So they just voted to leave the rates unchanged. So they're not raising rates according to this last PR that came out on the spy. Now they did release this statement today at 2 p.m. Eastern. So if you haven't seen this, you can go read this PR. I'll link it here into the chat. Let's see. Trading Ever After sees institutions buying and retail selling. So you think it's the opposite of what we're thinking?
Um,
I don't
I you
think.
know, like you said, the news reports that you saw today were talking about the spies dropping and everything. And that big movement that we just saw in the market, if that is someone building a position above 440s, this is not a good sign. Like if someone they took it up over 440, it's been struggling to get over 440 for I don't know, 2, 3 days.
Yeah, it's
And
been
all
struggling
of a
for
sudden
sure.
some big godlike figure has pushed it up above $4 above its struggle points, and now it's back under the struggle point. I think I'm smelling
Yeah,
bears.
that quick too. I mean, it shot up right above it and then immediately dropped back below it. Whoops. But we'll see. We'll see what they actually say, because that's, this is kind of what I'm sure they're going to probably um, continue to do what they're saying at this point with everything. Let's just read this real quick. Indicators of economic activity and employment have continued to strengthen. The sectors most affected by the pandemic have improved in recent months, but are being affected by a recent sharp rise. Now, how you just sent me an Instagram video yesterday of this of this nurse saying almost this exact same thing to this fellow on the phone about COVID. This is almost that exact same thing. The most affected sectors have been improved, but are being affected in recent sharp rises. Are they being improved, or are they being affected? Like, what's happening here? What do you mean? Which one is it? You know what I mean? Like, already, first two sentences. Job gains have been solid in recent months, and there's an employment rate. Supply and demand imbalances related to the pandemic and reopening of the economy have continued to contribute to elevated levels of inflation. It's not him. It's not the Federal Reserve printing money and adding money into the money supply. It's not the literal definition of inflation. No, it's COVID. COVID come in and started pressing the buttons on the money printer, and it started locking down places. It just walked in the White House, kicked Trump in the nuts, and said, "Hey, I'm taking over. We're locking down the whole entire world." No,
I bouncing back up.
COVID is not Debo. Like, yeah, COVID is over. But yeah, this is. I mean, already, yeah, right here. The path of the economy continues to depend on the course of the virus. So he's still backpedaling at the same. Like I, it doesn't even make sense what the Fed is saying. Like, am I wrong here, Hal? Like, what are you reading and seeing on this? That
Well, I'm looking at
the spy coming back up here.
yeah, I was looking at the charts. I saw it come back up, but I don't think it's gonna be able to retest. If anything, it'll just give one more opportunity for their lowly janitors to get in on this bearish move.
The lowly janitors.
Yeah, they got all the top CEOs. Everybody's in there in that $4 rip up, but they getting the last people in there. They getting the lunch lady in there as well.
One Life and Trading Ever After saying the algo's bought. I don't I don't know if that's an algorithmic move right there.
Algo got some money, boy.
Yeah.
Blew the whole market four or $5.
Yeah, I mean, guys, this is a move on the SPY, the basket of a bunch of stocks, the S&P 500, moving from 440 up to 444 in a span of 3 minutes.
Yeah.
That's insanity. And then it came right back down in 5 minutes, even lower. It dropped $6, and now it's popped back up another $2. Like, this is acting like a damn low float penny stock right now. Like you think the algorithms are playing with the SPY like it's a low float penny stock? I mean
There's
they
no way.
could. I mean they could be, loading the algorithms up to load up on something, but again, is this bullish movement or is this a bull trap? And then there's the downtrend on the SPY that it's been in. So even with that big pop right there, it still hasn't broke the downtrend from January 11th, where we started this market pullback. Let's see. Daniel B wants you to say hi to him, Hal. He said you live in his monitor.
Hey, Dang V.
Orlando said Orlando said the real move will be seen 4 to 5 bars after this. I agree, actually, Orlando, with that. I think the party's just getting started. I don't think we're coming to an end or a beginning of anything. I think we started crashing, and this is just all fluff and nonsense to keep the market from dropping fast. But as I was saying in the live stream this morning, there's a lot of mainstream media saying the market's going to crash, but they also change their minds every day on just about everything. So they could say it's going to crash today. We'll see if they keep singing that same tone now that the Feds. And speaking of the Feds, let me see if they're starting to stream yet. Let me get this off here. Yeah, let's keep an eye on the SPY, because this is craziness. Yeah, look at this 15-minute chart. There's actually an uptrend on the SPY at the moment on the day, but let's see if that even holds up. All right, where did you go? There it is. I don't want the statement. I just want calendar. Oh, here we go. News and events. Okay, so they're about to speak, it looks like, or we're getting close here. You guys let me know on the volume let me know if you can hear the music clearly that they're playing right now, or if it's too loud or what, because I can't. It's really hard the way we're doing this to know exactly where the volume of this is at.
I think in the Discord it may allow. Let me see. Settings. Or you might have to do it from your side.
What are we looking like, guys? I couldn't hear you when you were talking, Hal, while
Oh,
Jerome
can you
Powell's
hear me now?
talking. Yeah, I can't hear you at all right now, Hal.
Hello, hello, hello.
Okay, now I
Can
can hear
anybody?
Hal. You guys can't hear Jerome Powell? Okay, let me work on this here. God, it's like so loud in my ears. I'm just gonna let this play for a second, guys.
Make sure your desktop monitoring has you
associated
got
with the
you
Omicron
got it on
variant
monitor
will
and on
surely weigh
audio
on
output so they can hear in OBS. Should be in the advanced audio options.
unable to report for work because of illness, quarantines, or caregiving needs. Fortunately,
Man,
health
that
experts are
440
finding that the
man is
Omicron
holding
variant
like a
has not been as
beast.
virulent as previous strains of the virus,
I think,
and they
yeah, I think
expect
it's
that
gonna.
cases will drop off
If it can
rapidly.
just hold under the 440, we'll
If the
see the
wave passes
420 in
quickly,
no time.
the economic effects should as well, and we would see a return to strong growth. That said, the implications for the economy remain uncertain, and we have not lost sight of the fact that for many afflicted individuals and families, and for the healthcare workers on the front lines, the virus continues to cause great hardship. The labor market has made remarkable progress, and by many measures is very strong. Job gains have been solid
Can you hear
in
me?
recent months, averaging 365,000 per month
can't hear
over the
me?
past 3 months. Over the past year,
Blue, yellow,
payroll
green.
employment has
Can you hear
risen
me,
by
Ben?
6.4 million jobs. The unemployment rate has declined sharply,
He's laughing,
falling
but
2
I don't
percentage
know if he can
points
hear me.
over the
Hello, 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 hello. Well, okay, let me see if y'all can hear me. Hear me, let me check.
I can hear you now. They can hear you. They said we're all good on both sides, but when Jerome Powell's talking, they can't hear you, I'm pretty sure.
Okay, that's cool.
Yeah, Jerome Powell's taking up all the volume. I can
Got
hear
you.
Hal, but I can't hear him when Jerome Powell's talking, so I think, that's what's going on. So we'll let him talk some, and then if you want me to stop it, just wave me down and I'll stop it so you can say something.
Okay.
In addition, some who would otherwise be seeking work report that they are out of the labor force because of factors related to the pandemic, including caregiving needs and ongoing concerns about the virus.
Are you calling us losers
The
now,
current
One
wave
Life?
of the virus may well
Okay, I see
prolong
you.
these effects.
I can see the chat too.
Over time, there are good reasons to expect
Feelings are a
some
little
further
hurt, but it's
improvements
okay.
in participation and employment.
We didn't come here to cry. We came here to see the spy die.
What's that, Hal?
Oh, I was talking to One Life. He said I can hear you losers, and I was just telling him we didn't come here to cry about that. We came to watch the spy die.
We came to watch the spy die.
Yeah, man, it's going back down. It's back under 440. I'm
A
telling
higher
you, they got their
demand in the near
janitors in
term.
there. They got
These problems have been
man, they
larger
got everybody in
and
there
longer
now for this
lasting
ride
than
down.
anticipated, exacerbated by waves of the virus. While the drivers of higher inflation have been predominantly connected to the dislocations caused by the pandemic, price increases have now spread to a broader range of goods and services. Wages have also risen briskly, and we are attentive to the risks that persistent real wage growth in excess of productivity could put upward pressure on inflation. Like most forecasters, we continue to expect inflation to decline over the course of the year. We understand that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. In addition, we believe that the best thing we can do to support continued labor market gains is to promote a long expansion, and that will require price stability. We're committed to our price stability goal. We will use our tools both to support the economy and a strong labor market, and to prevent higher inflation from becoming entrenched. And we'll be watching carefully to see whether the economy is evolving in line with expectations. The Fed's monetary policy actions have been guided by our mandate to promote maximum employment and stable prices for the American people. As I noted, the committee left the target range for the federal funds rate unchanged and reaffirmed our plan, announced in December, to end asset purchases in early March. In light of the remarkable progress we've seen in the labor market and inflation that is well above our 2% longer run goal, the economy no longer needs sustained high levels of monetary policy support. That is why we are phasing out our asset purchases and why we expect it will soon be appropriate to raise the target range for the federal funds rate. Of course, the economic outlook remains highly uncertain.
I got what? What are you cracking up about, Al?
Can you hear me?
Hold on, I can't hear you. That's got to kick in.
Can you hear me?
Yeah, I get you. What'd you say?
So I'm on the live stream for Powell, and I'm looking at the comments, and they're saying sell, 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 sell.
Look at this. I mean, it is pulling back at the moment. It's tested in this uptrend on the day. The SPY is. Yeah, I don't know. This is crazy talk. Is it me? Are you watching Powell actually speak? Have you ever seen a crackhead when they like fiending and they're like, Like he keeps doing he keeps doing a little okay, and then right before he's about to say something important, like, oh, it's gonna be. Yeah, let's just get back into it. Jesus.
We intend to hold securities in the amounts needed for our ample reserves operating framework. And in the longer run, we envision holding primarily Treasury securities. Our decisions to reduce our balance sheet will be guided by our maximum employment and price stability goals. In that regard, we will be prepared to adjust any of the details of our approach to balance sheet management in light of economic and financial developments. The committee has not made decisions regarding the specific timing, pace, or other details of shrinking the balance sheet, and we will discuss these matters in upcoming meetings and provide additional information at the appropriate time. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Now it's going to get interesting. We'll get into questions. But if you heard that, guys, Jerome Powell said they're not even thinking about shrinking their balance sheet yet. They're going to taper the bond purchases, but they've not even thought about shrinking the balance sheet of the Federal Reserve. So we'll talk about that later. But let's hear some of these questions, and then we'll get into some analysis from us of what we think about it. First off, who is this guy, and is he okay? You see this guy up at the top right here beside me? He's like got half a head. I'm a little concerned about that guy. We'll find out what he's got to say. Make sure he's okay. This chick's got a mask on. She's the only one on all. Well, this guy's got one, but he took it off. He's got it hanging on his ear. But she's wearing a mask, having a nice cup of tea. But she's like a cup of tea she's making. She's got a pink mask on. All right, okay. Let's get into this. Oh my God. Also
that we're going to be guided by the data. In fact, what I'll say is that we're going to be led by the incoming data and the evolving outlook. We'll try to communicate as clearly as possible, moving steadily and transparently. So, more to your question. We know that the economy is in a very different place than it was when we began raising rates in 2015. Specifically, the economy is now much stronger. The labor market is far stronger. Inflation is running well above our 2% target, much higher than it was at that time. And these differences are likely to have important implications for the appropriate pace of policy adjustments. Beyond that, we haven't made any decisions.
Thank you. Let's go to Victoria Guida at Politico.
Hi, Chair Powell. I wanted to ask, you were talking about the health of the labor market, and I'm curious whether you would characterize where we're at right now as maximum employment, and also along those same lines, obviously rate hikes on the table this year. Do you think that the Fed can raise rates, bring inflation under control without hurting jobs and wages?
Sorry, just getting both parts of your question written down. So I would say, and this view is widely held on the committee, that both sides of the mandate are calling for us to move steadily away from the very highly accommodative policies we put in place during the challenging economic conditions that the economy faced earlier in the pandemic. And I would say that most FOMC participants agree that labor market conditions are consistent with maximum employment in the sense of the highest level of employment that is consistent with price stability. And that is my personal view. And again, very broad support on the committee for the judgment that it will soon be appropriate to raise the target range for the federal funds rate. The other thing is maximum employment will evolve over time and through the course of the business cycle. In the particular situation we're in now, it may well increase. The level of maximum of employment that's consistent with stable prices may increase, and we hope that it will as more people come back into the labor market, as participation gradually rises. And the policy path that we're broadly contemplating would be supportive of that outcome as well. So the thing about the labor market right now is that there are many millions of more job openings than there are unemployed people. So you ask whether we can raise rates and move to less accommodative and even tight financial conditions without hurting the labor market. I think there's quite a bit of room to raise interest rates without threatening the labor market. This is, by so many measures, a historically tight labor market. Record levels of job openings, of quits, wages are moving up.
Now, I thought he said just prior to this that the labor market was doing great, even in the PR, the labor market was doing great, but now he's saying the labor market is really tight. And the thing that I was cracking up about was that the question that she asked was what I've been talking about, is them raising the interest rates while also doing everything that they're doing. How are they going to do all that? And you saw he's just like, it's almost like he didn't even want to answer the question. Like he was looking down, writing on a piece of paper. Like he had no direct answer right away. And still, everything he just said was a bunch of BS. He's contradicted himself. So the weird thing is, I don't know what you want to call it, the SPY, it's like we're seeing it in real time where people are trying to decipher. Well, never mind. They deciphered just now. But we were seeing in real time these candles moving up and down as people are trying to decipher what he's saying. But the SPY's about to drop to a new low a day here, very close to that 437 range. What are you thinking after so far what we've heard, Hal? What's your opinion change? You think we're going into a bull market now?
I think we're gonna dump. I think there's too much uncertainty, especially with that big entry that we just saw a couple of minutes ago. Why didn't we see another rip again? Why did we see them get scared and exit? They're still bearish.
Yeah, see, we already cracked below that low of that candle, the below of that. Look at this. Look at the selling volume in the last, was it the 15-minute candle? Look at how big those volume bars are. These are 10 million in volume candles. And these are 15-minute candles. Look at this. So I mean, if you guys want to hear more from Jerome Powell, if you want to hear more of those questions, just let us know and we'll go back into that live stream. But I don't think there's anything he's going to say. Wow, that almost... Do you see how quick that candle opened up? It almost gapped down. It was so quick it was dropping. We might see the market halt here soon if it keeps dropping like this.
Man, everybody's in this bearish motion now. All the corporations, they've got, like I keep saying, they got their janitors in there. Everybody's bearish on this. If it does go up, it's going to be a huge move up because everybody's sitting on the toilet right now.
Let's see. SSRA did rip up, got up to 30, but with that, with what's happening right now at this second on the SPY, any long trades you're in, they might be turning around on you after we just dumped from 442 to 435.
Yep, everything's taking a turn.
The market will not halt down. Are you crazy, One Life? That's one of their rules. If the market drops, I think it's the first time 5% here. Let me look it up. I mean, they did it. You were there in 2020 when they halted the whole entire market to the downside, One Life.
No, it wasn't. It was just born yesterday.
Sounds like it. SEC, let's see, entire stock market halt. Let's see.
Yeah, everything's going down with it. Like they were just waiting. They were like, let's just wait and see what he says. And now it's just dumping.
Well, because he started, I mean, you saw him, like I said, he was looking like a crackhead. He was coughing. He was shaking. He was, freaking out, all that stuff like that. Let's see. No, I'm trying to find the actual law they put in where they can halt entire markets, but We'll see it if it keeps dropping like this. You ain't got to look at this. Oh my God. Let me pull up the indexes. This is One Life says this is a different situation. Okay. If you say so.
I know those hedge funds and all those corporations are definitely up on their puts.
Somebody's up on. Oh man, I should have kept SPXS. I didn't know if it was gonna. I didn't know what was gonna happen, man. It's too sketchy. I should have known that it was gonna crash. I've been bearish for 2 years. I don't know why I was even hesitant today. It's it's hard to call how people are going to react to things, because it's not like we're calling out how the green bar is going to react to the red bar. We're calling out how people are reacting to price movements in assets. But let's pull up these indexes and futures here and see what else is happening at the moment. Let's see, Bitcoin actually holding up at 38,000 at the moment here. That Dow Jones cracking back below this uptrend that we had. Look at the spike on the dollar index. Guys, this is people yanking money out of the market. The dollar index is getting stronger because people are taking their money out of their assets, out of the stock market, and putting it into cash so they can either hold cash or buy something else. This big spike we're seeing in the dollar right now is from all this money coming out. So to see the dollar index being moved like this is big money moving. There's no retail traders moving the markets like this. This is full on institutional battles going on in front of our eyes. Really doesn't look like much of a battle. Looks like institutions just yanking the bags at this point. Let's see. Oil having a little pullback, but oil already at all-time highs. Ethereum. Interestingly enough, the crypto market really not getting affected that hard. Ethereum, let's see the last 15 minutes. This is actually the Ethereum future. Yeah. So nowhere near the type of chaos in cryptos right now that we're seeing on the SPY. So this may be that time where I was saying we may see investors not want to go into stocks. They may want to go more into cryptos and gold and silver and stuff. Remember, cryptos have been down quite a bit from their all-time highs. And now that the SPY is dumping like it is, or seemingly going to continue to dump, that money that we just saw come out of the dollar, or coming into the dollar index, people coming back into the dollar, where's that money going to go to? And right now we're seeing, crypto's holding pretty decently, and gold and silver still holding their areas. Actually, gold took a little dip there too. So interestingly, wow, gold and silver both was affected by that pullback, where Ethereum and Bitcoin were not affected. Crypto investors. That's interesting. It's the first time we're kind of seeing where's the money going. Look, Bitcoin's starting to come up a little bit. So let's see. It's going to be interesting over the next couple of days to see where the money goes. Let's see. We got a whole bunch of stuff, a bunch of comments here. Orlando said if the SPY dropping, I think it'll blow through support. In history, stock market was halted twice. Yeah, 1987 and 2020. So a year and a half ago. Does it seem that crazy that they would halt it again when they just did it a year and a half ago? I'm not that. Why was that be shocking? Let's see. Lauren said he was just asked if they are watching the market, and he said that they are primarily more interested in the real economy than the stock market. Whoa. Whoa. I wish I would have seen that clip. Kayla Rose Feather said, "Buy safe, Moon." Now Orlando's saying the SPY's going to rebound. Yeah, Bitcoin and Shiba are going up.
SPY's gonna rebound. Okay.
One Life, you're saying big money won't be in crypto if market is down on rate hikes. Well, I mean, that's your opinion. I'm looking at the charts right now. Bitcoin's going up, Ethereum's going up, SPY's going down, buddy. So, it's not. Where else is the money going? Let's see. Let's check the real estate index. Nope. Real estate. Oh wow. Real estate index dropping as well. So even silver and gold, like I said, having some pullbacks. The only thing's not pulling back, cryptos. So we'll see, One Life. But right now, the technical analysis is totally against your view and opinion. The charts are saying a totally different story. Let's see. Katsuki Crypto said he's short on Bitcoin. Trading ever after they're going to hodl and do rate hikes in March. Oh, there goes Daniel B. Your uneducated opinion on cryptos, they're tulip bulbs. Yeah, exactly, Orlando. This is confused money right here. I said that, One Life. I said Bitcoin had pullbacks. All you gotta just look at the charts, man. It's not a debate when there's a chart. Bitcoin had pulled back from all-time highs. And now that the stock market is really pulling back and we're seeing Jerome Powell talking real crazy, Bitcoin's holding up right now. I mean, where would you go? If you're panicking because the stock market is crashing and you see silver's dropping and you see gold's dropping and you see oil is dropping, actually oil's coming back up. So you're either, where's that money going to go? You're either going to go to oil, you're going to go to whatever's up, but that was low price. Like this was discount prices for Ethereum at 2,500. So all that money coming out of the stock market, Ethereum's, looking at 2,500, Bitcoin's looking, 38,000. Them numbers might look better to big institutions than what we're seeing in the SPY. What'd you think, man? You're in here. What's your thoughts on what's happening right now with the crypto market? So far, Bitcoin and Ethereum holding up.
Bitcoin and Ethereum are holding up well. Why wouldn't they be? They're totally separate. They're totally separate from the SPY. So and the markets in general, they're not really. It's other than the synthetics. If all markets started dumping, then it's time to go ahead and say your prayers because you're about to get buried. But yeah, I just didn't expect Bitcoin and all of them, they've already had their drop. They dropped off and people are like, wow, they had their drop, they're at discount prices, and now the SPY is dropping. So why not move money over there?
Yep. Exactly.
That's the
Yes.
escape plan.
Yeah, because it ain't gold and silver, clearly. Never once have I said that cryptos are not a risk asset. But, whether or not, that's not even the question we're talking about in life. We're saying if the money's pulling out of the stock market, which it clearly is. I mean, this is obviously money pulling out, and the dollar index is showing the money's being pulled out because the dollar's strengthening at the moment. That only leaves a couple of choices. Where are you going to put your money at right now where it's not going down? It's that simple. I mean, it's not off base. Is it a risk asset? Well, anything that you're going to put your money in hoping to sell to somebody later for a higher price is a risk asset. Stocks are risky, the same as real estate, the same as anything else. Anything can happen. You can die walking out of your house. So, I mean, what does that matter? That's not a case for a debate or an argument whether or not something is a risk asset or not. Any type of investment is a risk. That's why everybody has a disclaimer saying that all investments are risky. Now, will the money stay going into cryptos right now? I don't know. I'm just saying from what we're seeing, we saw that money just pull out and go into the crypto market in some extent. Let's see, is he still talking? Let's see if he's still talking on here. Yeah, he is.
Thanks.
So you asked about the risks first. So the one risk is that inflation risks are still to the upside in the views of most FOMC participants, and certainly in my view as well. There's a risk that the high inflation we're seeing will be prolonged, and there's a risk that it will move even higher. So, and we don't think that's the base case, but you ask what the risks are, and we have to be in a position with our monetary policy to address all of the plausible outcomes, and that calls for us to be in position. We have an expectation about the way the economy is going to be evolved, but we've got to be in a position to address different outcomes, including the one where inflation remains higher. And of course, that is a risk to the expansion.
We've been
saying that what we need here is another long expansion, which is the kind of thing we saw over the last, which is the record long expansion. We saw labor force participation rise. We saw wages persistently higher for people at the lower end, and there really was no obvious imbalance in the economy that threatened that expansion. It could have gone on for years were it not hit by the pandemic. So we'd love to find a way to get back to that. That's going to require price stability, and that's going to require the Fed to tighten interest rate policy and do our part in getting inflation back down to our 2% goal. So I mentioned two-sided risks. A couple things. One, the COVID is not over, and COVID can continue to evolve, and it's just we have to accept that it's not over, and the risks to it can slow down growth, and that's sort of a downside risk from a growth standpoint. I would point to another risk is just further problems in the supply chains, which could slow down activity, and you see the situation in China as a situation there where that's their no COVID policy may cause more lockdowns, is likely to, and that may play into more problems in supply chains. In addition, there's what's going on in Eastern Europe and things like that. So there's plenty of risk out there, and we can't forget that there are risks on both sides. So that's there. That's what I would say. I know you've been all over this issue with my colleagues, Craig, on the issue of information. We don't have that information at the board, and I asked the Inspector General to do an investigation, and that is out of my hands. I'm playing no role in it. I seek to play no role in it, and I can't help you here today on this issue. And I'm sorry I can't.
Thank you. We'll go to Gina now.
What? This man just said, "I'm sorry, I can't. I just can't. I can't talk about it. I'm the Federal Reserve, but no, I can't." He even put his head down like a sad puppy. Oh my goodness.
So the last time we saw an SEP back in September, we saw that you and your colleagues were projecting that inflation would sort of sink back down quite close to target by the end of the year. And I wonder if you still think that projection from December is a reasonable one, and if your thinking has changed at all. I wonder how you're thinking about that. And I also wonder if you could talk a little bit about the pathway to getting to that deceleration. Like how do we get from here, 7% CPI, to where you expect to be at the end of the year?
So I'd say,
Good question.
Since the December meeting, I would say that the inflation situation is about the same, but probably slightly worse. I'd be inclined to raise my own estimate of 2022 core PCE inflation. Let's just go with that by a few tenths today. But we're not writing down an SEP at this meeting, but I think it hasn't gotten better. It's probably gotten just a bit worse, and that's been the pattern. That's been the pattern. So I think if you look at the FOMC participants are.
All right, I can't. I'm sorry, I can't. I can't, guys. This is hysterically unbelievable. Like, she just asked him, how are we going to get from where we're at to lower in inflation, which is the whole reason for this press conference. And he just said, inflation, it's kind of worse than it was. It's not good, but it's not really too much worse, but it is worse. Like, this is the guy in charge of the Federal Reserve who can't even answer a question and make any sense whatsoever. This is unbelievable. Like, it is hurting me to watch this. And it's hurting because of how much I'm laughing.
One is we will eventually get relief on the supply side. And, the ports will be cleared up. And there will be semiconductors and things like that. Now, what we're learning is it's just taking much longer. So I think longer than expected, and that I think does raise the risk that high inflation will be more persistent. I do think we'll come off of the highs that we saw in the early part of this episode in the spring last year. But really, the question is going to be what is inflation running at? And so we'll be watching that. And our objective is to get inflation back down to 2%. It's also to provide enough support to keep the labor market healthy. The labor market is very, very strong right now, and I think that strength will continue. There's really a shortage of workers. We see it particularly among production and non-supervisory workers and people in the lowest quartile. You see very large wage increases. I mentioned some of the other indicators. So I think that's what we're looking at, and we're also, we realize, I think, as everyone does, that this outlook is quite uncertain, and that we're going to have to adapt, and we're going to communicate as clearly as we can, but we're going to have to be adaptable and move as appropriate.
Great, thank you. Thank you. Let's go to Colby Smith.
Thank you, Michelle. Chair Powell, when you talk about being humble and nimble about the path forward for monetary policy, does that also include the possibility of raising interest rates by larger increments and, say, doing a 50 basis points hike at some point if inflation does not moderate sufficiently? And should we interpret this approach as a departure from the gradual pace that we saw during the last hiking cycle?
So, as I mentioned, we have not made these decisions. We really haven't. And what I can tell you now, though, is that we fully appreciate.
I actually 100% agree with what Daniel B. Just said. He said, "No reason to laugh. They will never tell the truth to the public. This is theatrics for the sheeps." I mean, if you know any little bit about economics and you hear the stuff he's saying, it does, like that's what I've been saying. It doesn't make sense. So, it's to try to make people feel better, but right here's where the SPY's at now, down to 430. So obviously people aren't buying Jerome Powell's BS anymore. He can't BS his way out of this. He's BS'd his way up to this point, but like I said, when he's up there saying the crazy stuff that he said, the stuff that's had me cracking up, the stuff that's had me looking evil with an evil smile, and like the stuff that makes no sense, like I don't know, man.
I'm still looking at the Powell chat, and I just glimpsed over and I saw a comment that said, "Oh my God, my savings."
Oh, it's not funny, but it is. Like, it hurts, man. It hurts. I hate to see people get destroyed like this, but it's all, it's funny at the same time. So maybe we have on this SPY 5-minute, the previous low here was 420. We're not that far from it. But even that little trend line there, that short-term trend line on that time frame is cracked down now. We're very close to cracking 430 at this rate. It's like the longer that Jerome Powell sits up there and talks, the more they're loading up their puts and everything. They're just like, nope, we're selling it all. We're getting out of here.
Think about how rich those people were in that initial push up we saw, like from the 444. That's a $10 drop.
That's what I'm saying, man. This is getting nasty because investors aren't buying it. Like Orlando just said, he's saying the same thing that he said the last session. Exactly. Nothing has changed. Inflation keeps going up. He says the job market was good, but then you heard him sit there contradict himself and say there was all types of problems in the job market. Some of the stuff they're looking at is not that good. It doesn't take a genius to walk outside and see a bunch of businesses that have closed down due to all this financial chaos that's been going on the past couple of years. And he said there's a high turnover rate in the job market. Well, the job market's doing so well, why is there such a high turnover rate? Because the turnover rate, when I was a general manager at a restaurant, if you've ever been in that sector of the restaurant, turnover rate is how many people that you're having to hire all the time, hire and fire or quitting. Like, you're constantly turning over new employees. And if you're doing that a lot, that's not a good sign. So I don't know why that would be a good sign for the labor market if that's not something that you want. Like any corporate restaurant or any probably corporate retail, anything is going to have metrics you have to follow. And one of those metrics is keep a low turnover rate. So I don't see how he can try to flip it like he did flip it and say that's a good thing, because it's not. You're enjoying those comments over there.
I'm just thinking of all the memes, man.
Oh, the memes the next couple of days, that's going to be where the real comedy is. We're going to see memes, blaming everybody and everything. It's going to be Trump's fault. It's going to be Biden's fault. It's going to be George W. Bush's fault. The only thing I want to know is, what's Nancy Pelosi's portfolio at? What's she buying right now? Because that's what I want to be buying. Nancy was the one who was shorting this. This was Nancy Pelosi's short position. She came in here, that insider knowledge, insider trading that she's cool with. No problems here. We'll pull up the comments. We'll watch a couple of more minutes of this, and then I'll pull up the comments section so we can look at that, because we'll do a little YouTube inception, I guess.
That delivery times are shorter.
What are you looking? Where are you looking at the comments at? Are you on YouTube watching it, or are you watching the one I'm watching?
Yeah, I'm watching YouTube on my phone as well. Or watching. Let me see which one this is. Live Fed Chair Jerome Powell holds news conference following FOMC meeting. I'm pretty sure all the comment sections are hot.
You're probably right. All right, let me pull something up while Jerome Powell's talking.
Our position to make the changes in our policy to do that, and we're committed to doing that, and that's really where we are. In terms of your question about the size of rate increases, we haven't faced those decisions. We haven't made them.
He just said it.
It isn't possible to sit down here today and tell you with any confidence what the precise path will be. But
yeah.
As we work our way through this meeting by meeting, we are aware that this is a very different expansion, as I've said a couple times, with higher inflation, higher growth, a much stronger economy. And I think those differences are likely to be reflected in the policy that we implement.
Guys, you want to see something real interesting? I clicked on the first one that I came to. It was the Washington Post's live stream. Their comments are turned off. Washington Post is not allowing any comments. That's interesting. So let's see if Yahoo Finance.
Yeah, Yahoo Finance is the one I'm on, and it is rolling.
That's showing me the comments are turned off on that one as well.
No, they must have just turned them off.
Let me see if this is a different one.
No, they're coming through. Yahoo Finance, they're spilling through. People out here boosting a bunch of cryptos. Somebody dropped Dogecoin Army.
Let's see. I just want to find some of these comments just to see what other people are saying. I can't get none of this to load. Let me try something. It may be because we're streaming from mine. Here, guys, I'm gonna play this again for you.
Well anchored at 2%. That's always the ultimate goal, and we do that in the service of having inflation. We get to that goal by having inflation average 2% over time. And if inflation doesn't average 2% over time, then it's not clear why inflation expectations would be anchored at 2%. So that's the way we think about that.
What? What did he just say?
What was the last part of your
I missed
question?
it. What did he say? I didn't.
I was asking if you're protecting the employment side of the mandate, whether.
What's that, Hal?
Lauren said that I'm talking about the live chat. I don't know if you were looking at the live chat on the YouTube channels.
What's that?
You said that their chat was turned off. Were you looking at the live chat?
Yeah, multiple ones I went to, the live chat was turned off, but I'm checking. I'm gonna pull up some on Brave, so that way it may be because we're streaming from my computer or whatever, or my YouTube, my Google. Because I'm streaming on Google, so I may have to be out of it. I don't know. I'm just guessing. I have no idea.
No, you shouldn't.
But for some reason, that's what's happening. Let's see. I'm losing my things. Here we go. Where did that Jerome Powell one go? He's about to... What are you guys yelling at? What do you mean, top chat? Let me see. Let me go back. You guys are freaking me out. As I'm triggering your anxiety.
It's our job to get inflation down to 2%.
Chat
in a situation where
chat is disabled for this live stream. That's on the Washington Post one. Here's the
The state
Yahoo Finance
dependency
one.
you've been using as a framework for the last year and a half or so?
if we saw a very strong labor market, we would wait to see actual inflation before we tightened. And so that was a very state-dependent thought, because for a long time we'd been tightening on the expectation of high inflation, which never appeared. And that was the case for a number of years. So in this particular situation, we will be clearly monitoring incoming data as well as the evolving outlook.
All right, there, I popped out the
Let's go to
chat.
Michael Derby.
There we
Thank you
go.
for taking my question. I want to ask you, with
Yeah, I
the
was about to
benefit
say,
of
this chat's
hindsight,
hot.
and I realize, I mean, that is what it is, but do you feel that, monetary policy and
There's some
fiscal
funny chats in
policy
there,
maybe
man.
did too much to react to the crisis, and that part
Good
of the
stuff,
inflation
good
problem that
stuff.
we're having right now is because the government response, collectively was more than what the economy ended up needing?
So I think it's too soon to write that history, really. But what I would say is this. If you remember what it felt like at the beginning of the pandemic, literally the global economy shutting down in large part, including our own economy, and people going to their homes for weeks on end in masks, and there are no vaccines, and it could be a really long time to get them, and you have economic activity drops by a shocking
to
amount.
break
in one quarter.
430.
So there was a real risk of lasting damage. And I think Congress responded remarkably with the CARES Act, incredibly timely, very powerful. There'll always be flaws in these things, but in real time, it was a remarkable achievement. And we responded, and what we were able to do was, stave off a collapse of the financial system at the beginning and make time for what really needed to happen, which was the income replacement and then the recovery that Congress enabled with the CARES Act. So now that was a lot. And what we did was a lot. And now, what we have now is we have the strongest recovery of any country, and we have a recovery that looks completely unlike other recoveries that we've had, because we've put so much support behind the
on
recovery.
this side.
And we're managing the relatively high-class problems that come with that, which are high inflation and a labor shortage. So, and these are serious problems, very serious problems that we're working as hard as we can on. Was it too much? Again, I'm going to leave that to the historians. But look, in 25 years, we'll look back at this incident, which will be a 2, 3, 4, 5-year period, and we'll say, we'll have a much better basis to make a judgment about the actions that people took. But it was all founded, though, in a very strong reaction to a unique historical event. And I guess I'll have to leave it at that. I hope I'll be around to see how that looks in 25 years.
Did this 100-year-old man just say he hopes he's around in 25 years to be alive to see what the economy looks like? Rip 401ks from last year. Man, these comments are hilarious, man. I keep seeing a bunch of people promoting the Tiger King coin.
Broke 430.
Like during a market crash, that's what we're talking about, is Tiger King coin. Oh my goodness.
Thank you.
Thank you. Let's go to Jean Young.
Thanks, Michelle. Chair Powell, some investors are expecting the yield curve could flatten or even invert after rate hikes begin. Would that worry you? And how important is that risk in the Fed's consideration for adjusting policy?
So we do monitor the slope.
Yeah, see, I mean, Powell, he can't even answer questions. SPY is cracking that 430 right now. Retail traders are freaking out right now. They are flipping out of their minds. People are saying sell, buy Tiger King coin, bear. Look, here's another one. Buy gold dip, buy BTC, buy a bunker, crap coin to the moon, sell all now, sell Biden has 3 years left, crashing. Wakanda in you. Like, we need a new pandemic? What?
Hey. I think One Life had a good point this morning when he said we're just gonna have to let all this stuff digest.
Hold on, Hal. For some reason, you're not moving anymore.
I'm not.
You weren't. Let me see.
Oh, whenever you minimize, I think it's Discord or
Yeah,
something.
I didn't minimize you though. I saw that you weren't moving, and I tried to fix it. Let me see if you're working now. Move around.
It might be your OBS. Is it your OBS or the Discord that needs it? I'm moving, but
Okay, okay. Let me try to get you back in there again. There we go. Now you're moving around. Yeah, you're good now. You're back. What was you saying?
brain fart. I forgot.
We're testing at 4:30 right now. What do we got? An hour or so until the market closes. Hour and a half.
Yeah.
Or no, that would be. Let's see. No, that's 4
No,
Central.
we got like 30 minutes until the
Yeah, we
market
got 30
closes.
minutes. So, okay. I mean, we've got there's no reason to listen to any more of what Powell has to say because he has nothing to say. He's talking about he's going to leave questions to the history book writers 25 years from now, and he hopes he's alive in 25 years. This dude's like 70-something years old. Like, man, it's not looking good, guys. I mean, it's clearly, we cracked 430 just now, 429. The bottom, I mean, let's just go over to trading view. The bottom, the next bottom anyway, is a ways away. Come on. We'll just do this. There we go. So, we've cracked that 200 now. I mean, this looks like clear indication of continued sell-off. The next bottom, maybe that, like I said, 420 may hold us something, but probably not. The next bottom I'm thinking is 350 looking at the daily chart on the SPY. What do you think, Al? Same
Let me look over at the SPY. You said the next bottom is where you said?
420 maybe, but then 350. I don't see any other support after that 420 mark. It looks to me like it's just straight down the 350 from here.
Let me get my little drawing tools out and see if I can draw a nice little trend here. Okay. I'm gonna call a bounce at the 41650. 41650 will be the next bounce spot.
Yeah, that little hump right there.
Mm-hmm.
It's just like a little bit there, but still, I don't think it's I mean, I don't know that. Yeah, maybe.
With this drop here, though, I mean, I can't be certain that it won't just gap down tomorrow.
Yeah.
Like you just wake up and it's like 350. Welcome.
Let's see. Tesla reports at close. Do you mean Tesla earnings at close? Is that what you're talking about? No, I never said straight down to 350. If I did say straight down to 350, all I mean is there's not a lot of support areas. I didn't mean we're going to drop from where we're at right now at 439 and open up tomorrow at 350. That's not what I'm saying.
That's what I'm saying.
That's what you're saying.
No, I'm saying it could gap down quite a bit.
Mm-hmm. Oh yeah, for sure. It definitely got down, but that's the point I was making is there's not really that many areas of support or resistance anywhere. There's no past chart history that's up here. This is the highest the market's ever been due to all this Fed inflation. So now that the money's coming out of the market, I mean, we're not even that far down, really, at the moment, comparatively to where we were started at in 2020 before COVID, and then after COVID. Or not after COVID. I guess we're still kind of in it. But before COVID, the tip high was 340. So, of course, there's going to be some days in between where it's going to be some small bounces. But I don't think we're going to find any support like other than 420, and maybe and that 420 is still close to what Al's talking about too. This little congestion peak over here that we could slow down at 420 maybe. But then again, like you said, we could gap down right below 420, and then where's the next support? 400 maybe, but it did not, like looking back at 400, it didn't really have any problems breaking over 400, neither did it holding above it. So I mean, it wasn't really that much support or resistance. It just kind of went right through there. So there's not, I mean, where else would you be drawing support at on this chart? Show me that. Show me where your support lines are drawn that you think where it's going to hold up at, because there's not that many areas where it could.
Yeah, he can just if you want to show the support, or what are you trying to do? A trend line or just a straight support line?
Oh no, One Life said I was being naive to think it was going to go straight to 350.
No.
And then One Life just said to fire you. And then Orlando said, "What if Ben is correct about everything?" And One Life said, "I will kill myself on live stream." One Life, you might not want to make those type of, you're feeling real froggy. You want to put your life on the line against my predictions. I wouldn't do that. I would put my life on the line against my own predictions, nonetheless, anybody else's.
Oh man.
Where would new support form at, Orlando? I mean, new support could form, but normally new support forms from old resistance. We don't have any old resistance. No, so the only support lines, we also don't have any indicator support. We're below all EMAs, so there's no indicator support. The only possible support lines that could be new are natural support areas, like maybe 400. But we're not, it's going to have to test there for a while to hold up a new support area that's never had any price congestion or anything else around it. So, 400 being a nice whole number, we could stop right there. That's a possibility. It's impossible to call the bottom of a market in the first place. We're just making our best guesstimations here. But I think pretty much all sentiment, besides a few people, is pretty bearish. And now even cryptos are starting to pull back a little bit. Bitcoin a little pulled back. Ethereum, did it pull back? Ethereum's still over 2,500. And gold, silver slowed down too.
The next level of support is looking like it's that 429, 430 area. It's got a little channel there. It needs to get through there and start holding under that.
429.
Yeah, or 430 area. It just continues to find resistance there or support there.
Yeah, there's a little congestion there. And again, guys, here's another thing. Support and resistance is a technical indicator. It's technical analysis. The whole entire thing going on right now, supply shortages, all the things Jerome Powell's talking about from the Federal Reserve, this is not normal circumstances for support and resistance. Like, this is not normal for technical analysis. There's nothing, like, you could not have told me this earlier. No one in their mind could have predicted off of technical analysis or really anything that the SPY from 1245, where it was just a doji star, was all of a sudden going to rip up $6 and then dump all the way down. Just looking at the charts alone, if you were ignoring what's going on with this, the Powell conference and all of this, you would have never seen this coming whatsoever. So when we're talking about a whole entire market, technical analysis is not enough. You can't just go off of technical analysis to find support and resistance areas. If the whole market sentiment is that everybody is dumping, then why would anybody come in and buy? The support in the first place is a price area where people want to buy at. So what support area, what price level are people going to put their hands out to try to catch this falling samurai sword right now? Who's going to be the person to do that? You know, that's what support is. It's not a line on a chart. It is how many people, or what area, price area, are people going to come in and be buyers. And considering the market just cracked below this 200 day, which it's been above since back in May 20th. Yeah, right around May, June. We're now going to be in a downtrend. So what sentiment is going to make people want to come in and catch the falling samurai sword? What price do you really think that everybody's going to be, okay, let's come back in the stock market. It's fine now. That's the question you got to ask yourself. Looking at the SPY on a chart is not good enough. Way too many factors. It's like leaving out a hole. It's like trying to sew a shirt and you don't have any thread, or you have one piece of thread. You need multiple pieces of thread to sew the shirt. So technical analysis in this situation is not enough. Let's see. Lauren said she needs a cigar and several shots.
Oh boy. She enjoys vaccination shots that much?
Oh, that was cold. Instant gratification. We have instant gratification day trader opinions. This is what One Life just said after I've been saying the market was going to crash for 2 years. And, just yesterday in the live stream, it was, oh no, you were late. Am I late or am I early? Which one is it, man? You're contradicting yourself again. You don't want this smoke. Go back home, One Life. He also said, let's see, Lauren, you see a bear market for the least the next 4 to 8 months. Inflation might get better, but coupled with COVID, likely not. I don't see any reason why inflation would get better. I mean, Jerome Powell's the one who supposedly controls the inflation and had no idea how to answer any questions about how we're going to get back to 2% inflation. So, Orlando, you can make money both ways, luckily. Absolutely. There's always ways to make money. Talk clear and exact then. I need an interpret. Are you, really, One Life, you're going to use Daniel B's excuse now that I have an advantage with English? Is that what the excuse you're going to give me? You and DB, you're from Michigan, One Life. You can't use I'm from a different country. I have an advantage. You have an advantage over me in English. You're from the north and I'm from the south. I was born with a disadvantage to your to your English, bro. I can barely pronounce half sentences. You guys are silly, man. I love you guys so much. All right. Anyway, SPY's trying to rebound here right before market close. Well, I don't want to say rebound, but it's holding up at least at this 430 area. So, I mean, anything else that you got for him, Hal? Because I mean, at this point, I just want to see what's going to happen tomorrow. But I think we're going to gap down. Yeah, that's what I was about to say. I think we're going to be heading down some more as well. We'll see, though. Maybe it reverses. Who knows at this point? I mean, Stonks and Chomps. Lord name. Stonks and Chomps is a pretty good username. I like that. All right. Tesla report earnings, which will drag the market up. What if Tesla's earnings are bad? Then what happens? You think the market will go up then? Well, that's an interesting point, Orlando. Let's see if that happens. We'll see if Tesla's earnings do anything at all. It could. It could not. Let's actually check Tesla real quick. So Tesla on the daily chart is actually still pretty high priced. You know, it's up here at $900. There is some previous peak resistance back here where $900 could be support. But Tesla super, super bullish since 2020, you know, still moving up. Not really had much of a correction. That right there was the dip when I think he announced that they were going to accept Dogecoin as a payment, and shareholders did not like that. But yeah, I don't think So the heat map is showing Microsoft, Google, Nvidia, Tesla, all, and Verizon, showing them green. Everything else pretty much is all red at the moment. I mean, you may, I don't know. I don't know what Tesla's earnings would do to change market sentiment at this point. And that's only one company as well. Even though Tesla is a big company. I don't know. But we'll find out tomorrow. Let's see. Hold on. One Life said gap down to where, HH?
Gap down to where? Is that even possible to call that out? We're on the side of a mountain. We're watching the... What?
Jeff Bezos said Jeff Bezos needs to put some money into the market. Nah, he just took all his money out. That's what that... Oh my goodness. All right, but yeah, we'll be back tomorrow. You're on schedule for tomorrow's morning live stream, H.
Yep.
All right, so we'll be back tomorrow morning for some more live analysis, because I don't know if I'm going to be trading if the market. I don't know. We'll see. We'll see what the market looks like tomorrow, man.
Lauren said she's just buying a deal, bro.
Yeah. Yeah.
I mean, if it gaps down 20%, I mean, sure, that dip sounds nice.
Yeah. So One Life said, when it doesn't, we can laugh at you, HH. Make a prediction.
Oh, okay. So I'll make a prediction, a real good one. Let's see. Let me look at the SPY and see where it's at. It's at 432. Tomorrow, we'll at least, let's say, my chart will pull up. I'm looking for at least below. I don't want to make it just too stupid. Definitely below 425. I'll be looking for it below 425.
There you go. So he's saying gap down below 425.
And that's if it doesn't get there today.
Yeah, if it doesn't get there today. See, on the weekly chart, it's trying to hold the 50-day moving average still, but that downtrend on the weekly chart, even the top of this candle, is below the downtrend. Yeah, there you go. I actually think I think Hal might be right here. I think we might see that gap down now I'm looking at it a little closer. Let's see this 1 hour chart. Oh yeah. Yeah, that's what I was saying earlier. This trend line had cracked pretty strong. This was a short-term trend line. So even that uptrend is broken, so yeah. We'll see what happens. It's going to be probably a real interesting rest of the year. For sure. But all right, guys. I'm going to go. Jesus. He's trying to. One Life's got you all types of questions here, man. Can you guys start doing before the close shows? Well, we're going to try to do a few more things here and there where it's both of us. But it's, we're both very busy, so it's hard to match up our schedules to be on the same schedule to do those type of things all the time.
Exactly.
But yeah, I think that's it for today. At least every Monday and Friday. Well, that probably is not going to work, I think, with HH schedule. I don't know.
Definitely not Fridays.
That's what I was saying. That didn't sound like that would work, but
yeah.
We'll work on it. We'll see what we can do. We're going to try to both, get in some more content together on the Framework Fortune Home channel here, and we'll bounce around the other channels as well. But I think that's good enough for today. I just want to go and not pay attention to the stock market for the rest of the day. Wait for tomorrow. Orlando said, all right, see you at 4:40. All right, guys. Appreciate everybody joining us as always. Hopefully you didn't get destroyed today if you were in a position and all of a sudden this chaos came in. But if you did, take it as a learning lesson. Guys, have a great rest of your day. Stay safe out there. Until next time.